Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, January 28th, and it's about 5 p.m. New York time. So tomorrow we'll be getting the FOMC meeting. Expectations are for no change in policy. Then, of course, on Thursday morning, we're going to be getting the ECB rate announcement. Expectations are for a 25 basis point rate cut. We're also going to be getting the advanced reading on GDP. Estimates are for a 2.8% year-over-year growth rate, down from 3.1% last quarter. And then on Friday, we'll be getting core PCE. We're looking for a 0.2% increase, up from 0.1. And that pretty much brings us to where we are in the market at this point, because, clearly expectations are changing around ECB rate policy and the Fed. We certainly had the sharp sell-off in the market on Monday here in the U.S. with NVIDIA leading the way, and that caused the market to price in an extra rate cut from the Fed, leading it to two rate cuts. But right now, basically the key is going to be for the euro is where is the ECB going with policy and where is the Fed going with policy. If you get a Lagarde who's still indicating rate cuts to come, and you get a Powell at the press conference indicating that the Fed's on hold for the time being, or the Fed's on hold for the foreseeable future, it's possible you could see this little rebound that we've seen in the euro begin to fade away. We talked last week about the importance of the 61.8% retracement off of the low in September of 2022, and that certainly has continued to hold and be a major support level for the euro. If we take a little bit of a closer look and we start looking at it from this perspective, you can see right now that we haven't quite gotten to the 38.2% retracement level. So we haven't really seen enough to say that the retracement in the euro is over, but we certainly have seen a decent rebound in the euro. And more importantly, we've also seen the 10-day exponential moving average begin to turn higher as well, and we've seen the RSI actually break out and begin to move up. And so when we start thinking about the euro and where we are at this point, it looks like momentum has shifted just a little bit at this moment, potentially to something that could go higher. You can also see that we've broken out above this horizontal resistance level, or we're very close to breaking out above that level, around 104.5. If the euro can continue to strengthen here, I think you could probably see it run to around 105.80 or so. That would allow it to basically complete and get to that 38.2% retracement. If for some reason we do not see the euro continue to rally, continue to strengthen versus the dollar, and we see it break the 10-day exponential moving average, I would think that you're likely to see the euro move back down towards 102.5. When we look at the pound, the BOE rate decision doesn't come until next week. But again, when we look at the pound, it's very similar, where we've seen a rebound in the pound. We've seen it obviously move back above the 10-day exponential moving average. Here you are in the Bollinger Bands above the 20-day moving average, and it looks like resistance probably comes around this 125.5 level. You can also see that this is a resistance level when you draw a horizontal line across this area here as well. So again, when we're sort of looking at where the pound is, it looks like it can continue to strengthen somewhat, just like the euro can versus the dollar. And I think a lot of this is going to come down to where what the Fed is thinking about when it comes to where rate policy is and really where it's been going. You can see also the pound hasn't really retraced to 38.2%, and that would kind of again suggest to me that there is potential here for the pound to continue to strengthen in the days ahead. Clearly, if we were to see the pound break back below the 10-day, I would think we could potentially see a retrace back to around 123 and then potentially 121. But overall momentum still looks favorable to the pound moving up a little bit more. When we look at the Japanese yen, we did get the BOJ hiking rates last week, indicating there may be more to come. You've seen that the yen actually broke this major uptrend. We've also seen that the yen is now trading below the 10-day exponential moving average, and that has been serving as resistance. And so right now, again, we're sort of just keeping an eye on this area of support here at 154.25, and we're also keeping an eye to see if this holds here at the 50% retracement level. If 154.25 breaks, then I would think we could probably see the yen continue to decline, or rather strengthen, to around 152.5 and potentially all the way back to around 149. So basically, when you look at the pound, the euro, and the yen, it's all sort of suggesting euro strength, pound strength, yen strength, weaker dollar, at least where we are right now. Again, for just a little bit, maybe we could get another week or so of some strengthening in before we start seeing, we get to some of those key levels where we could start seeing another reversal take place. Gold got up to resistance around 120, around 27.85 on Friday. To yesterday, we sold off pretty sharply today, and we bounced off the 10-day exponential moving average. Today, we did the same thing as well. So again, the 10-day exponential moving average is really the key here. If this level breaks, I think you're going to see 27.20, and then you could potentially see 26.30. But if we start seeing the dollar weakening, at least over the short term, that could lead to the gold prices moving back up and moving back towards 27.87, potentially even eclipsing it. Again, it's going to largely be dependent on how the Fed signals policy and ultimately where the dollar goes over the very near term. If you start getting a stronger dollar and you start seeing the pound, euro, and yen weakening, I would think that you probably break the 10-day exponential moving average on the pound, and you start on gold, and you start moving back down towards this 26.5 area. When we look at oil, oil's had a really big move up, and it's had a really big move back down. Certainly, this all seems to kind of make sense. A 61.8% retracement from the initial rally that started in mid-December, and then of course, and right now we're finding some support in this area. You can see when you look a little bit closer and zoom in on the 15-minute chart, you can see how this area in here has been sort of a resistance and support zone, and right now we're just basically hugging that lower level of support with resistance around 74.5. So again, when we take a look at where the where oil is right now, you can see we've fallen below the 10-day exponential moving average. We've certainly been acting as resistance until we get above that exponential moving average around 75. Again, we're looking for oil probably to move lower. A break of 72.5 probably signals a retest of this trend line, maybe around 71. However, if you kind of take that one step further, if the cues from the dollar are correct, that the dollar could be in a weakening mode, and this could be also suggestive that we could see oil really moving up. So I would watch for a breakout above 74.5 and then a breakout above 75. That would lead, I think, to a bigger move to 76.5 and potentially a move that overtakes the highs around 81, because it would set up and confirm this idea that this is a breakout and that what we're seeing in this breakout is just a normal retracement. We also saw the DAX fall on Monday, although not nearly as sharply as what we saw in the U.S., falling around 50 basis points. Again, 10 days been acting pretty well in terms of trending higher, suggesting that the trend, at least right now, is higher. But when you look at where it is again on the RSI, we're overbought here above 70. When we look at the Bollinger Bands, we still have a little bit of room, but I think it kind of goes back to what we were talking about last week when I said that we're probably due for some sideways consolidation. I think we're pretty much getting that sideways consolidation. There is some more room now to maybe move up to around 21,690 or so. If you want to get cute with the DAX, you can certainly see that this is your upper level of resistance at 21,514. Here's your lower band of resistance around 21,090. A breakout above 21,507 clearly is bullish. If support breaks at 21,100, it could lead to a much sharper drop. When we look at the FTSE, the FTSE had that big move up in the breakout. We're looking at the hourly chart. You can see we came down, and then we're trying to retest these highs. And to this point, that retest hasn't really worked out all that well. So right now we're watching to see what's going to happen at this 84.70 area. When we look more closely at the 10-day, you can see we bounced right off the 10-day exponential moving average on Monday. We put in this pretty ugly looking candle today, an indication that we were up, and then we gave those gains back. But at least from an overbought, oversold standpoint, the FTSE is no longer in that type of condition. And so if the FTSE wants to start moving higher again, it certainly is free to do so from that standpoint. If we just overlay it with copper prices, you can see copper prices have really come down pretty sharply. We know that there's a pretty strong relationship between copper and the FTSE over time. So again, if we start seeing copper prices moving lower, I would watch for the FTSE to start moving lower as well. Here's the NASDAQ. You could certainly make a case that even though we dropped pretty sharply on Monday by more than 3%, by almost 3%, all we did was come back and retest the breakout of a bull flag. That's certainly a possibility. There's really nothing on this chart that stands out and gives you a good sense of where the direction is at this point. You can see we're back below the 10-day exponential moving average. We gapped below it yesterday, came back up to it today, tested it, and that's where we failed. At least from a Bollinger Band perspective, we are trading above the 20-day moving average. So there's really not much to say that we're not really at a point where we're looking at a NASDAQ that's overbought or oversold. It's sort of in the middle of the range. And really, if you look at it from a longer term perspective, at least since the middle of December, all we've been doing is bobbing back and forth in a sideways chopping range around the 10-day exponential moving average. And so at this point, I would continue to think that your upside resistance is somewhere around 22,000 on the NASDAQ, with downside support somewhere around 20,560. When you look at the S&P, it's also very similar. Yesterday we gapped below the 10-day. Today we rose back above it. Again, S&P pretty much just trading in a chopping sideways motion. Resistance clearly lives somewhere around 6,100, and support clearly lives around 5,785. When we look at the Dow, it's come all the way back, basically almost all the way back to the highs, which really gives us a pretty clear indication that there's a lot of strength in this market, in this rebound. Resistance clearly is around 45,000 and 45,100 or so, with a breakout potentially leading to much bigger gains. You can see we're clearly above the 10-day, so momentum has certainly turned more favorable. Although, again, you're getting pretty close to a spot here in time where you're looking at a Dow that's getting pretty overbought. You're in the upper Bollinger Band, and your RSI is about to cross over 70. So this could be an area where you start to maybe see a pullback taking place in the Dow. I'd be careful of this one. It looks like it might be a little bit overextended at this point, at least on the short term. Anyway, hope you have a great rest of your week, and we'll see you next. Bye.